Hey all, Choiboy here. Welcome to another video. Today I have a requested video by one of my viewers about Simply Wall Street. So in the comment section, he or she said, hey, why don't you make a video about Simply Wall Street? So here I am making one for you to tell you what it's about and how it should be used. Disclaimer, I'm not a financial advisor. Please take everything I say with a grain of salt. It is purely for your entertainment purposes and I may not be right for everything. Just keep that in mind and always double check and cross-reference my statements. No further to do, let's get on with it. So this is the main kind of page right here. So become a better investor. How do they do that? So they get the data from S&P Global Market Intelligence, and they would probably get it from like New Zealand Stock Exchange, ASX and stuff like that, NASDAQ, NISC, CBOE. So from all these stock exchanges, basically they gather all the data and they do some world-class analysis model. It is apparently open source, so you can probably look into how they actually do it, and they use the data to build beautiful infographic reports. Now some of them are hard fact numbers and some of them are generated by their analysis model. I'll explain more about that later, so we'll get to that. Basically, it's an easy way to look at a stock and kind of scan through the numbers and make a general statement about the company. Pretty much like, does it look okay? Are there any red flags? A lot of information about a stock could be very obvious by looking through Simply Wall Street, and it just makes it really easy to value or review a stock without having to read the financial report. I do recommend people to look at the financial report regardless, but this way it's a nice kind of starter to a stock, right? So it's a very nice one to have a quick scan of the company, and that's pretty much it. That's what it should be used for, personally speaking, at least. It's not really free, so you got the free version, which is institutional quality data. Yeah, sure. Then you got 10 company reports, and you can have 6 companies per portfolio, and you can have 1 portfolio. So I think you can only look at 10 company reports. I'm not sure, I hit the limit at one point when I was using this for free. So earlier this year I bought the investor plan. So I bought it for the same price, I think $80.50, and that's USD. So if you're in New Zealand, obviously for most of my viewers you'd be paying the New Zealand dollar equivalent, which is, I don't know, like maybe around 120 bucks or so. So just keep that in mind. It is a bit expensive. And if you know how to read a financial report, you don't really need it, but it's just that I do a lot of this YouTubing, and sometimes people, ask me questions and live streams about, hey, how about this company? How about that company? Instead of looking at the financial report, I kind of, scan through the company here. So it's a lot easier. And that was the whole plan of buying the plan here and, using Simply Wall Street for the next year or so. And if it serves me some good, then maybe I'll renew it next year. We'll see about it. But honestly, most people should not really require the professional plan. I think the investor plan is more than enough for most people, and if you have a lot of time on your hands, you might not even need this at all. So that's really up to you, but that's how the plans work out at Simply Wall Street. So if you go to the dashboard right here, you can see the portfolios, the market industries, New Zealand market, US market, and specific sectors. You can see the top gainers and the top losers, the industry tops, the worst industries. There's a lot of things you can look into. Like, for example, portfolios. You can have 1 or 2 or 3 or 4, and if you have the investor plan, then you have unlimited number of portfolios you can make. So you can have 1 portfolio and another, and you can keep making it on. This is kind of like my main one. So yeah, you got updates about stocks in the main page here for specific stocks you might follow. Then you might see some news about it here, and you can also see it once you click into the company as well. So if we look into my public portfolio, as you guys know, I have Kathmandu, Abano, Bliss, Plexure, and Vista. So that's nothing new to you, and nothing has changed. So before we get into Kathmandu specifically for my example today, I'll just scroll down the portfolio thing. I haven't really used the portfolio kind of analysis and the infographics in the portfolio itself, but there's a lot of interesting things, like for example, how some of your companies lie on the volatility kind of graph here, or the contributors to returns, or like which one is making you money and which one is losing you money, for example, or how your portfolio is diversified, which is pretty interesting because all your companies have sectors and subsectors and stuff like that. So there's a lot of things you can get out of these simple infographics. Yeah, I mean, these are kind of things you'll see in the individual stocks as well, but you can see that on a portfolio level as well. So that's something pretty interesting, I guess. So today we'll be using Kathmandu as an example. I'm going to skim through it really quickly. There is nothing much to it. As I said, it is a very good platform for scanning through stocks in general. That's how I use it as. So first of all, you got the market cap when it was last updated, and the data sources. You can see all these data sources right here. So these are the analysts when they're making these estimates of revenues or earnings and stuff like that to come up with the infographics, especially their bot generated kind of analysis reports. This thing, yes, world-class analysis model, and they analyze stocks and stuff like that, and they use inputs from analysts to make predictions. So that's how they're kind of a lot of these valuations and bot generated numbers come from, but a lot of them are also hard facts. So it's really nice that you don't have to look for a financial report for this. As I said before, it gives you a brief overview of what the company does, just like how Sharesies describes the stock as well. There's some rewarding parts and some red flags they might see. These are probably bot generated once again. I don't pay too much attention to this. I kind of just skim through it as well. This snowflake analysis, they call it, so it's pretty interesting. It's just like a snowflake kind of thing. Puts the stock in 5 different kind of metrics: and value, dividends, future, health, and past. The data, you can have a look at where the data is coming from, and you can see what the analysis model is. It's quite interesting, but basically I'm normally skipping to here. First of all is the share price history and some announcements or anything like that. They normally pop up right here, and then for example, dividend cancelled, then they say, hey, we're going to be suspending the dividends payout, stuff like that. You can see a lot of the good stuff here. These are kind of nice to read, but I don't put too much effort into those, to be honest. The volatility, depending on the industry of the stock, for example, Kathmandu is in the retail sector, so they're saying it's a moderate volatility, and Kathmandu has been quite volatile, so that's what this is saying. So this is the thing that kind of trips up a lot of people. I try not to put too much thought into this because this is what the current market price is, and this is what Simply Wall Street thinks the company should be valued at this point in time. Looking at the numbers, they probably have some kind of algorithms to just smash up all the numbers they have in the financial report to come up with with the metric being is it worth this or that, and it probably uses a bunch of like PE, PEG, PB ratios, a lot of things, and dividends, the revenue kind of trend. There's a lot of things they might be looking into, but regardless, take this with a grain of salt, guys. It really doesn't have to be like this. For example, Plexure is at $1.50 right now, and it says its fair value is like down at 22 cents. So it doesn't always work. Don't rely on this number. Then you got the more interesting ones like price to earnings ratio, which people call PE ratio. So price to earnings. So how does it do this? They get the market price and they slash it by the EPS. EPS means the earning per share. And basically what that means is that in simple English, it means, is this company overvalued or undervalued? It's pretty much saying that based on its earnings. As I said, it's market price over the EPS, earnings per share. Earnings per share is the earnings per number of outstanding shares. So that's the kind of relationship the PE ratio has. So this is probably what people look at the most out of the ratios. The PEG ratio is kind of like a level down from it. So it's the PE ratio, but you're dividing that by the annual EPS growth. So I think this is the one that would probably bring in a bit more analysis into it, and it's a bit more subjective in a sense, and that really depends on how well the company has been doing so far and their earnings track records and stuff like that, and their possibility of growing in the future. It's another good way to look at if a company is overvalued or undervalued. So most people would like this PEG ratio to be under 1, but it's quite hard to find something like that nowadays with the current climate. The PB ratio is another important one. It's pretty much saying if the company bankrupts today and it sold everything it had, how much is its book price? So that's what we call book prices, like physical assets and all that kind of stuff. If they sell it, the company's gone now. What are they worth if they sell everything? And quite a good one to compare with the market price. Therefore, PB ratio. Now, the PB ratio, the 1 means 1 PB ratio. So a 1 would mean that the market price is fair compared to its book price. If it's below 1, that means the company is worth more. The book price is higher than the market price, meaning it's undervalued. And vice versa, if it's more than 1, that means the book price is slightly lower than the market price. Therefore, the market price is slightly overvalued. So that's that. That's the ratios that people look at the most. Further going down, we got the earnings and revenues. It's really nice to see how much the revenue is going up compared to the earnings. Nothing much to talk about here, to be honest. As I mentioned before, EPS. So EPS is pretty much earnings per share. So you can see the EPS dropped heavily for Kathmandu. That's because, first of all, their earnings dropped a lot this year. Plus, they made a whole bunch of shares. Right, they did a capital raise, and for that reason you see a massive drop because the earnings went down but the number of shares went up, and that's the equation for EPS. So it kind of made a magnitude of difference of EPS compared to its earlier days last year. So last year its EPS was like 23 cents. Now it's like 1.6 cents. So that's a big difference in EPS, and it can go either way at any time given a climate like this. But yeah, that's an interesting one to look at in general. Past performance of its annual earnings, so you can then now see the revenue earnings, but you see a profit margin. See, so the profit margin for Kathmandu was hanging around 5, 8%, 10%. Then looking at a trend like this, when the revenue is going up and the earnings going down, then you can probably dig into why that actually happened. In a way, Simply Wall Street does make a lot of things quite obvious because it's visual. It's so much easier to analyze a company straight off the bat using visuals rather than words and numbers on a piece of paper. So that's really good to have, and that's probably the strong point of Simply Wall Street. Then we got the financial health, which then you can see the balance sheets and how much the equity goes up or down compared to the debt. And when the equity is going up along with the debt, then you make certain decisions. If the equity is going up but the debt is getting paid off, then that's another good kind of news right there. So there's a lot of things you can gain from just simply looking at a graph like this. It just makes everything a lot easier, and it makes your research a lot easier. For example, if you were looking at some trends and during a certain time frame and you don't know why that happened, then you could look for that time frame for that stock in Google or something like that. But at least this graph shows you, instead of you having to look into all these individual financial reports to find out this kind of trend. It's really hard to kind of come up with this infographics, so it is very useful indeed. Then it gives you a bit of comments of what it thinks based on the numbers. You get a little nice picture here of the balance sheet in box graph format. I don't know what to call that. Dividends is always something people look into, obviously. Kathmandu being a retail company, you would expect some decent dividends because it is normally held as a dividend stock. but with the recent volatility, it is quite questionable in a sense to treat it like a dividend stock at the meantime. You can see the track record of its dividends. That's really interesting to see, and you can see that in 2020 they haven't paid any of them because they cancelled both of them. A few years later you see this happen, and for people looking into Kathmandu, then they'll be like, why did this happen? And they can look into what COVID did to Kathmandu and stuff like that. So it's a really nice visuals right here once again. Then you get into some generic kind of nice to have information that's not necessarily too important, but how much the CEO gets paid, the trend of the CEO's pay alongside with the company earnings, and the trend. You're like looking at the trend. If the CEO is earning more and the company is earning less, then obviously there's a problem there, you know, those kind of stuff. You see the leadership team, like the execs and stuff like that, and how much they own and how much they get paid if there's information about it. The board members, you know, you got the CEO, then you get the directors and the chairman. You get the average tenure and the average age of the board as well. It's quite interesting, but not a essential kind of critical point. It's just nice to have, I guess. Then you got insider trading. So insider trading is pretty much when an insider, which normally means someone who is affiliated with the company or in the company, so on, buys or sells their own stock, really. So it's, for me, it would be like me buying or selling Plexure shares. That's insider trading. Graph kind of shows you how much has been sold and how much has been bought by insiders, pretty much. And you see a bunch of transactions for these insider tradings. They have like funds and public funds and stuff like that, and private funds in here as well, so which is quite interesting. I sometimes get really confused about what an insider really means. Like third-party fund providers and stuff like that is insiders, then I'm not entirely sure if that's the right thing to do. But yeah, that's interesting to see. Ownership breakdown of the whole company, how much of it is owned by the public, institutions, public companies, and so on. Quite a nice to have once again, just to see where the weightings are in a sense. And you get the top shareholders, and you see who owns the most of Kathmandu and who owns a little bit of it. You can see a bit of it here as well. And then you get to the key information, just generic information about the company, and you get the number of employees if they have the data for that too. And you can see that they've been laying some people off last year. So yeah, that's pretty much it. There's nothing much to Simply Wall Street. As I said, it is really nice to kind of look through a company using Simply Wall Street. It just gives you a generic idea of what the company is and what its numbers look like. But other than that, you do have to do further research, for example, looking into the product, the brand, the culture, and so on, and a lot of those things you wouldn't find on Simply Wall Street. These are strictly numbers, but as I said, please stay away from relying on this number right here, the valuation. It trips so many people up, and people buy it simply because this site tells you it's undervalued. Don't do that. Thank you for watching today. If you found today's video pretty informative, please like this video, subscribe to the channel, put the bell notification for the next update, put a comment down below what you thought and what other videos I should make, and I'll see you in the next video. Until next time, I will catch you around. See ya.